Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, we are gonna talk about Carnival Corporation and we are going to do a fundamental valuation like I did with Facebook stock. So this is the video about Facebook. If you haven't, go to check it out, okay? And look at that, guys. Carnival Corporation, at the time I'm recording this video, the market is not open yet, okay? This is the pre-market hours, okay? Look at that, absolutely crazy. So let's go to check, okay? Let's do a valuation and let's try to find a range where the fair price for Carnival Corporation is, okay? So leave me a like if you find this video interesting. You're gonna help me a lot with the channel. And subscribe to the channel. Let's begin. Alright guys, so a quick recap about the balance sheet, okay? This is from a previous video, go to check it out. I described all the three of them very carefully. Anyway, just for Carnival Cruise, what we need to know is basically what we need to remember is okay, the margins, net margins, not too bad, okay. Anyway, what we need to remember is this, okay, very risky. Current ratio 0.27, which is a lot below 1, okay, very risky. Very risky, but the less risky of the industry, okay, compared with Royal Caribbean and CCL Norwegian cruise lines, okay. So also, total assets divided by total liabilities is the best one, okay? It's the best one. And the ratio is 1.76, and debt to equity ratio is the best one, okay? Below 100%, while the other competitors are above 100%. Book to value at the moment, we have an undervaluation of minus 37.24, and this is gonna be interesting later, okay? We will be back to this in the valuation, okay? But let's go through the valuation now. So remember, risky, okay? For the valuation, guys, you never do one valuation, okay? You want to find 3-4 prices and after that have an average, okay? 3 scenarios with the discounted free cash flow valuation and 1 scenario with the free cash flow yield valuation, okay? So let's start. We have a lot to go through. Now, the first scenario, which is, in my opinion, a bad scenario, very conservative scenario, okay? Rate of return is 10%, so above the normal return of the market, which is around 7.5%, 8%, okay? So well above. And let's see, and here I say, well, okay, in 2019, Carnival did not do a very well year, okay, just free cash flow positive, just above 46 million, okay, which is very, very low. We can see from here, okay, so 2019, let's go back, and we can see that this was not very good, but over the previous years, we are above, okay, we are above at least 1.5 billions, okay? And in 2016, 2017, we went above 2 billions of free cash flow in positive, okay? So it's not bad, okay? Now, we have this virus problem, but the company was making money, okay? Was making money. Look at that, look at the financials, okay? Revenues always growing in the last 4 years. So it's a company that has hit a black swan event, but it's a company that was profitable before, okay? The cruise business was great, so it was not something already bad before, okay? So let's check. Now, for the bad scenario, I said, well, you know what, 2020 is gonna be bad, and for bad, I put myself a loss of 1.5 billion, okay, which is a huge loss. It's a huge loss, okay. I don't know if probably it's gonna be smaller, okay. Anyway, bad scenario, this one, boom, minus 1.5 billion. 2021, I said, well, a slow recovery, okay? A slow recovery. They're going to survive, but in a slow recovery. 2021 free cash flow 0.4 billion. 2022 0.8, and 2023 1.8, and just in 2024 the company can make the same they were making before, okay? So near 2 billions in free cash flows, okay? So very slow recovery. The terminal value perpetual growth, which is very low, 2.5%, and let's keep in mind that I put 10% in this scenario as a discount rate, okay? So very conservative, 2% more than the market. And what we have that the present value of future cash flows, so the value of the business today, the today company value is 20.8 billions. Now we have 0.599 billions, so 599 million shares outstanding. So we divided the today's company value divided by the total amount of shares outstanding, and we have the fair value, the fair price of the business today. Okay, now this looks great, well done, but there is a big problem. The big problem is that we have to adjust this for the net debt that Carnival Cruise has, okay, which is a lot. It's 11.5 billion in net debt. When I do that, I adjust the company value, so I deduct the net debt, and I have again I divided by the total amount of shares outstanding, and I have a fair price of 15.55. Okay, so bad scenario, this is it. Now let's go through a sort of a less bad scenario, okay? So trying to put things better. Rate of return, I put 9% this time, okay? You can see it, 9%, same perpetual growth. Let's see, I said, well, in 2020 this time they are not gonna make 1.5 billion loss, okay, which is huge. I said, well, at the end of the year probably 600 million in free cash flow loss, okay, and a slow recovery but a little bit faster, okay, from 2021 0.6 instead of 0.4 billion, 2022 0.9 instead of 0.8, and the same for 2023 and 2024, okay? Now let's see. In this case, we have today's company value of 25.9 billions divided by the total amount of shares outstanding. Fair value $43.25. Remember, we have to deduct the net debt, okay? 11.58 billion from this value. And we get that the adjusted fair price is 23.91. Another scenario, which is this one, is better, okay? Better. Rate of return, this time I put the rate of return of the market 8%. 8%. The same loss in 2020, and again, very similar in 2021, the same in 2022, 0.6 2021, 0.9 billion 2022, and exactly the same for 2023 and 2024, 2 billions, okay, instead of 2.1. It's just an adjustment. So the same cash flows, okay, but I lowered the rate, the discounted rate. So the rate of return, I put the one of the market, okay. What we get at today's company value of 29.85 billions divided by the total amount of shares outstanding, and we get the same $49.84 as a fair price. But remember, we have to deduct the net debt, okay? So after the deduction, we have $30.50. Okay, great. Now another price, okay, another price of valuation that we have. This is a simple one, is the book to value price. So it is the price that the shares should have to respect the value in the balance sheet. Okay, so basically it's very simple. You just take the stockholder equity, which is total asset minus total liabilities, 20.29 billions, and you divided this by the total amount of shares outstanding, so 0.599 billions, okay, and you get $33.87, okay. So that's the book to value price. And the last price I'm gonna find is with the free cash flow yield valuation. So I take in 2021 an estimate of the estimated free cash flows, and I take an average of those. So I took 0.5 billions, and you divide this by the total amount of shares outstanding, and you get $0.83 of free cash flows per share. Okay, now when we go through the historical free cash flow average yield over the last 5 years for Carnival Cruise, we have 4%. Okay, so to find the price, we just divide 0.83 divided by 4%, and we get a fair value in 2021 of $20.86. Okay, great. Now we have to push this fair price back to 2020, and we get $18.338. Okay, great. Now average fair price, let's take an average of this one plus this one plus this one, the adjusted one, not this one, the adjusted one, or the adjusted one. Okay, so plus this one, and we divide it by 5, okay, 5 prices. And we get an average of fair price of $24.43 as of today, okay? First, not today, but anyway, is the 1st of June 2020, okay? Valuation, fair price valuation. Now, we take a margin of safety of 30%, okay? Because it's a quite risky valuation, so 30% should be enough. If you're not sure about that, just put 35%, and we get $70.10. Okay, so this is a range, okay, meaning that Carnival Cruise fair price, fair value stands somewhere between 17.10 and 24.43. Okay, so the rally that we are having in these days, it's just this share that it's coming back to the fair value. Okay, it's not something crazy, it's what it is. It's the share price that has been completely devastating and has been undervalued for a couple of months and is now coming back to the fair price. Fair price that stands somewhere between those two, okay? So can be 20, can be 21. It's a range. It's very difficult to find a specific one, okay? So what's the fair price of CCL today? It's somewhere in between this range, okay? So what we do, we take the average, okay? We take this plus this, and we divide it by 2. With these kind of fundamentals that we have today, $20.77 can be the fair price of Carnival Cruise, okay? So I hope you find this video interesting, guys, and subscribe to the channel for more of those kind of videos with real numbers and real valuation. And leave me a comment below, tell me if you have a CCL, if you're planning to buy some, or if you don't like the stock. Leave me a like and see you in another video, guys. Bye!